Now here we're going to talk about U.S. exports and kind of what does that market really look like. So here you can see that we had a nice little increase of gasoline exports by about 240,000 barrels a day. Again, year over year, still down, but right around that 5-year average, which is kind of what we're expecting. Distillate remains depressed, which is something that we think is going to be a overhang going forward. As we talked about last week, when you look at Europe, what does storage look like in Europe? It's increasing with more flow coming from Asia, which will again kind of be that overhang in terms of where things sit overall. The bigger component that we want to talk about here is the big increase in crude oil exports, which is something that we were expecting. We were expecting a bounce. If you remember, I think it was about 2.5, 2.6 last week. We were expecting an increase to about 2.9. Here we came in at about a little over 3 million barrels a day. And again, it's just going to kind of be that average. We think it's going to, based on what we're seeing, it's going to come down. But a lot of this is being driven by China because China has been a big buyer overall. It's Europe. It's a little tough to get into Europe right now, especially where spreads are right now, which is something that we talk about in our report going out today, this week, in terms of just kind of where that overhang is. And then you have Libya, which is something we're going to talk about tomorrow in a different segment, just looking at, what is Libya coming back? Are they actually going to come back this time? And then that'll just put additional pressure on U.S. flow into Europe. But right now, we are seeing the support into Asia, specifically China, which again is coming just from this level. 3 million's high. Again, it's just going to be lumpy in terms of movements. So this will come down to about 2.8 next week based on kind of what we're seeing. But again, it's just going to be a matter of when things are released. But it's still something that's a positive to see overall in terms of kind of clearing some of this flow. So when you think about oil storage coming down, even though you had imports going up a little bit, you had refinery utilization rates come down, it was really a lot of this was going into the export market. So this is something that was supportive when you look at our crude oil situation. Here, just looking at exports in gasoline going back, we like to look at the 7 years. You can see that we bounced pretty hard off of that. The average we're continue up towards that the top of the range, which is nice to see. It's something that we think will start to walk back again, just timing delays overall. So it's something where we'll still be trending above the 5-year that average, but it's just going to kind of be along a much tighter versus this increase. The bigger one is going to be distillate. As we talked about last week, we expected it to kind of fall below that average. And now it's just going to be a matter of, well, what's the average going forward? We think it's just going to kind of suck around, just below that average norm. Nothing too crazy one way or the other, just given where we sit. The question is going to be what is happening abroad and how is the U.S. going to compete in a market that continues to increase in terms of just overall overcapacity. So here we're going to kind of break it down a little bit differently, and we're just going to look at crude oil floating storage. So here is just 3 good ways to kind of look at what is happening in the market. So crude oil and floating storage still remains at 5-year highs. We've come down a little bit, but again, just based on the movements we're seeing, it's just going to start to increase and just really kind of hang around this level as we've seen increases happening in Asia. So here you can see, the middle one is crude oil in transit. You can see crude oil in transit has come down. It's something that when we look at loadings, expectations, those are going to start to creep higher. But again, we're still not going to get back to the highs that we saw in 2020 because that was really driven based on OPEC putting a significant amount of crude back on the water. It'll just kind of normalize, especially as we see some of these increases, with I think Nigeria increasing about 11% month over month. And then this is where we talk about Asia crude floating storage. So when China's buying from the U.S., you have to consider, well, how are they going to continue? And it's just going to be a matter of timing. Can they streamline some of these things of pulling crude into the market, into their local market? They've talked about ways to streamline. Again, the stickiness is not only coming from an issue in China, but it's also that falling demand in India, which is putting more of that crude on the water. And it's creating this kind of overhang. So then when we look at Fujairah actually had a nice drop, and we're back down below the lows that we saw in April, which again is nice to see in terms of getting through some of this inventory. Japan, we're seeing a very continuous just decline in terms of the overall demand of crude, which is something we're going to talk about in the econ show, just as the overall activity on a PMI level, industrial level, just remains depressed, anywhere from 15 to 20% down year over year, which is just impacting their total demand overall. And now India is an interesting one because we keep talking about the shift in trade lanes, why the U.S. is going to struggle to get some of this distillate into the market. And India is a great example of why. So here you can see India imports specifically of diesel are down about 93% month over month and 79% year over year. So again, they're not importing diesel, and they're exporting diesel month over month. They exports increased 35%, year over year 18%. So not only are they taking in less, they're putting out more. And this is what's really kind of making its way not only into Singapore storage, but also into the European markets, which is just going to challenge the US overall. So this is where we're starting to see kind of this push me, pull me issue in terms of how do we get US product off the coast. And this is going to be one of those big overhangs. And then when you look at just the ARA gas oil storage, you can see that they're now back above the average. They're trending. It's just about or a little bit above the high that was reached in June. And the reason why we talk about gas oil storage and the issues in Europe is just because the spike in COVID is starting to show up. It's starting to impact the movements of not only the consumer, but also goods overall, which is just going to put in a bigger overhang. And it's going to push the storage higher just as new product comes to Asia, which again is going to hurt the US in terms of getting it into the market. And again, the Singapore totals, we're back to all-time highs in terms of the seasonally adjusted all-time highs. And it just comes down to this glut that continues to persist and permeate throughout all of Asia, which again is just that bigger overhang for the overall market. And that's where you start to look at those diesel margins. And that's why we talk about so much, what are refiners doing? Why are they cutting runs? You can see that those runs continue to get cut because the margin just isn't there, and they rely so much on gas oil pricing. And here you can see not only is it a feedstock issue, it's that end stock demand. And just given the gluts that we've seen in Europe, the US, and Asia persist, you're continuing to see a lot of pressure in terms of just where those profits are and why they're going away. And it's just we think there's going to be additional run cuts overall, which again is something we're going to go through in our report. And then this is just digging in a little bit more to the Singapore middle distillate. And you can see that the drift higher has been very, very continuous, even though we had China coming back quicker, we had them operating faster. It's just, there's a big disconnect in the market right now. And somebody came in and bought about 9,000 lots of crude while we were talking and spiked the market. Again, it's just you have this weird dichotomy in the crude futures in terms of where is pricing going to go, because you have some bullish tailwinds, and then you have these overarching headwinds, which has just kind of kept us in this tight range. And we still think that the next move is lower. It's just going to be a question of, when does that get priced in? How does that look? Because this was a relatively bullish report, and people put a lot of weight within the EIA versus some of the opaque markets that we try to follow. So as we go through the economy show, which is going to come out tomorrow, we're going to dig a little bit deeper on the underlying economics. Why is that going to continue to hinder kind of just overall activity? And then obviously on Friday, we have our favorite, the primary vision Frac Spread Count. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings.